I'm Matt Bouchard with REIT.com, and I'm here in New York City for REITWeek 2012, NAREIT's Investor Forum. And I'm joined today by the management team of American Residential Properties. We have Stephen Schmitz, CEO, and Lori Hawks, President. So your company's a little bit of a trailblazer in terms of your approach to property investment. Can you tell us a little bit about the company and how it got started?
Well, we started 3.5 years ago, Matt, and what we started after the real estate crash of 2008, and we saw really three things. We saw a huge diminution in property values in residential real estate. We saw also great availability of product coming through foreclosure or short sale. But more importantly, what we saw is the new American tenant, those people that went through foreclosure, went through short sale, families, fully employed families, right, that now couldn't qualify to buy a home, had a home before, but now needed to rent a home, not apartment dwellers. And it's that tenant really that led us to start our company. And what we did is Lori and I started with our own capital in 2008, started buying properties. We then launched ARP Phoenix Fund 1 in February of 2010, raised $45 million of equity in that fund, levered it 1-to-1, so that'll be 80, 90 million, kind of like that. And then most recently, as you know, we launched our REIT, American Residential Properties Incorporated, to go out and really expand geographically and really capitalize on the opportunity on behalf of our investors.
And speaking of the geographic focus, right now it's primarily on the Southwest, correct? Are there plans to, you mentioned, go broader?
Basically, we've already invested in Phoenix, California, and Nevada. And Fund 1 was actually Phoenix and Nevada. We've expanded not only to the north and south in California, but we also are looking to Atlanta and several select cities in Florida.
And is there something about the housing market in those regions, apart from other areas of the country, that make that the real target?
Absolutely. That was where you saw the greatest appreciation at its peak in 2006, and consequently the greatest fall after the housing bubble burst in the last 4 or 5 years. The country's lost probably $5.5 trillion worth of equity value. A large part of that was in those regions.
One of the important factors behind what we did is the big credit bubble in 05 and 06 was unique. The overcorrection was unique. So we're big believers in what Jeremy Grantham said, the famous British investor, who said all things will revert to the mean. And so what we saw is the deep overcorrection. So when we look at other markets, we look at markets that were bubbles, that have overcorrected to the downside, that we know when they revert to the mean, that will reward our investors.
And what that does is it allows us to get in at essentially 45 cents on the dollar of original value at peak, and it's probably somewhere in the neighborhood of 60% of replacement cost today. And we know it will move up, but the opportunities are tremendous.
And I mentioned earlier that this is, you know, a unique concept for a REIT to be invested in single-family homes. What has been the market response?
We are delighted with the market response. I have to say, for the first 2.5 years when we pursued this, there were non-believers as to both the ability to scale and the ability to manage that many assets. We know there are challenges. We think it's both about buying right, but operating right. So it's not simply throwing cash at the situation. You need to be able to operate it. We have seen a huge institutional market acceptance in the last 6 months, predominantly led by hedge funds and pension advisors, or private equity. But what we did find during our roadshow and our recent offering is that we have an enormous acceptance by institutional investors, including mutual funds, indeed private equity as well, but also state pension funds and family offices and the like, who recognize the opportunity. So we think it's growing, but it is a challenge, and we think that operators have to operate well in order to do well with respect to the future investment of institutional equity.
And that's what makes us unique, because of all the people now, this space is getting a lot of attention, and there are a lot of people coming into the space. We've been at it 3.5 years, and it's all about operations. This is very operationally intensive business, and because of the systems, processes, and procedures that we've built up over the last 3.5 years, we think it gives us a good leg up.
We know we will be compared to the multifamily, and our challenge is to try to recognize both the similarities and educate the investment community as to the differences, because they are not identical and there are separate challenges, but there are also ones where we think there are greater opportunities. Since we're trading below replacement cost, We think there's great opportunity in the future for actually cap rate compression going forward. So initially we know we will trade wide to that sector, but I think in terms of a risk-adjusted basis, it will tighten over time.
And now I'm sure this is a question that you get asked quite often, and it's one we have to ask any privately held company. Is there a scenario or a plan for a public offering?
By the terms of our agreement with our investors, we've committed to at least file by April of 2013 and be effective by October 2013. The equity markets warranting the conditions for doing so, but our intent was always to access the public markets, and this is just the first step in going there.
Lori, Stephen, thank you so much for joining us.
Thank you for
Matt.
having us.
For more on this and other news and analysis, be sure to visit REIT.com.